and very conveniently put a maximum price of gold and a maximum price of silver in. And that's interesting because the gold-silver ratio in those times was 12, according to Diocletian. But the other thing that was interesting is that if you look at basic items like food, eggs, chickens, clothing, oxen and carts and things like that, these were all fixed. And if you look at the similar prices of similar items today, it's actually not all that much different. So in fact what's happened is the purchasing power of gold for millennia has just moved sideways. It's been stable. It is stable. You will not have lost value holding on to your gold. But fiat currencies, this was from Nixon's ending of the Bretton Woods. Look what's happened. Even the mighty yen has lost 95% of its purchasing power. And if you look down at sterling, we've only got 1% left. I think the dollar is 2% left, and the euro is somewhere in between. So you can see that the problem is fiat currencies, not money. Real money is gold. Now, I was invited by the IMF to have a debate with a guy called Sultan Pozar, who works for Credit Suisse as one of their short-term money specialists, because he came up with this description that we are coming out of Bretton Woods 2, going into Bretton Woods 3. Now, what does he mean? I took up this meme, as it were, and the IMF noticed it and thought, well, perhaps Macleod could explain this in language which hopefully is a little more clear than the language that Sultan Pozar uses. So anyway, here it goes. What he was saying is that Bretton Woods 1 it ended in 1971, and no need to go on beyond that. Now, since then, what has happened is the creation of the petrodollar and financialization of the global economy. Now, what do we mean by that? Well, after the petrodollar was created, and then after we had that rather nasty inflationary period in the 1970s, you may recall that Paul Volcker jacked up interest rates at the end of the 1970s, so they were around about 20%. Now, basically what he was saying to people who were trying to flee the currency, look, you leave the currency, you're going to lose 20% interest. This was a very important point. Now, going on from there, what happened was that there was obviously some bright guy worked out the way in which, after that, to keep the purchasing power of currencies under control rather than having them diminishing, was to create a situation where demand for that money, demand for currency, would accelerate. And this is behind the financialization of the global economy. Now, where it has left us is it has left us with banks holding the highest level of financial assets as collateral against its loans that we have seen in history. Usually to take, say, a lien on a lease for a factory or whatever, all that's gone off to China somewhere. So it is entirely financialized. Now, what Zoltan was saying is that we're now coming out of that, and we're now going into Bretton Woods 3, which is the commoditization of currencies. And the sanctions against Russia have given Russia the opportunity to lead the way on that commoditization. I'm not going to go into that in enormous depth because what we're really interested in is how is this going to affect financing for mines and mining ventures. Well, in my mind, the good news in all this is that after a period of enormous disruption, what we are likely to see is the political class and central bankers finally rejecting macroeconomics and understanding what we have always known, and that is that true money is gold and silver, physical gold, physical silver. And they must back their currencies with physical gold and or silver. It will be obviously physical gold. What Russians are doing is they're using a basket. They're using everything they export, if you like. You have to buy rubles in order to live with oil and so on. The fact of the matter is there will come a point where the politicians' salaries are going to disappear down to zero unless they do something about it. And at that stage, I think that the backing for currencies will become commoditized in the same way as Russia is leading the way now. But what they should do, they will probably not get there initially, is to use gold, which is money legally, and do it that way. So my message to those looking in the mining finance industry, both as supplicants and providers, is that things could cut up very rough. We're about to have a major credit crisis. Look what's happening to the euro. If you think about what's happening to bond yields, just imagine how that affects the ECB's balance sheet. They're in negative equity. The Fed said the other day that unrealized losses on their bond portfolio, 330 billion against equity of 50 billion. So they're already in negative equity. The Bank of England has done a fairly smart deal. I won't go into that. Japanese yen, exactly the same thing. Now they've drawn a line in the sand. They're saying we're not going to let the yield on 10-year JGB go over 0.25%. And so what they're doing is they're trashing the currency by not accepting that interest rates should be considerably higher. So, and that's what's happening with Treasury yield. That is going to continue, incidentally, and that does not yet reflect the situation, which is obviously scaring the pants off Jane Dunn. And lastly, because, I'm sorry I've run the time a little bit wrong, but lastly, I come back to this. The big message that I have for everyone here is that if you price things in gold, you don't get the volatility that we have become so accustomed to in paper currencies. That is where the volatility lies. Thank you.